Hello traders, you are welcome back to the Forex Geek channel. And in this particular video, we are going to be talking about some of the best bullish candlestick patterns. All right. Now, candlestick charts are one of the most widely used tools in trading. And learning how to read them can give you a serious edge in the markets. So in this video, we are going to focus on the best bullish candlestick patterns that every beginner should know, right? Breaking them down step by step so you can recognize them easily on your charts. Now, let us start with the hammer pattern, right? One of the most popular patterns out there, all right? So, the hammer is a single candlestick that signals potential reversal at the bottom of a down trend. All right. So it has a small body. Okay. The hammer has a small body. As you can see. Okay, I am just going to. All right. So as you can see, the hammer has a small body and then a long wick below. All right, little to no upper shadow and then a long lower shadow. What it's telling you is that sellers pushed the price down during the session, but buyers stepped in, brought it back up before the candle closed. All right, let's see if we can find an example of a hammer right here. Just for the sake of time, we can't just be looking for different candlestick patterns on our charts because it might not always, be easy to find. Okay, sometimes you're going to find them easily, other times you might not. All right, so remember that hammers always occur after a downward move. Always, it has to be after a downward move, right? Then once you find it, you know that there is a possibility that an upward move is incoming. All right, so that is it for the hammer. All right, so the next candlestick pattern we're going to be talking about is the bullish engulfing pattern. Okay, so the bullish engulfing pattern is actually a two-candle formation, right? It's a two-candle formation that appears during a downtrend. So the first candle is small and bearish. Okay, just like you can see here, the first candle is small and bearish, followed by a much larger candle that completely engulfs the previous one. So this shows that buyers have taken control of the market, overpowering sellers, and it often signals the start of a shift in momentum. All right. Now, another powerful formation is the morning star pattern. All right. The morning star pattern is a free candle pattern that signals a potential reversal from bearish to bullish. All right. So with the morning star, the first candle is large, like we can see here. It is large, right? And bearish, it must be bearish. The second candle, yeah, is a small candle, all right? Actually, don't worry about this first candle, second candle, third candle. The second candle should be the one in the middle, right? And this should be the third candle. So the first candle must be bearish. Second candle is the one in the middle, the small candle, okay? It can actually be bullish or bearish. It does not exactly matter. Then the third candle must be bullish, all right? It's a strong bullish candle that closes well into the body of the first candle. So the morning star shows the market is rejecting lower prices and shifting toward buying strength. Then we have the piercing pattern. All right. We have the piercing pattern. This is a 2-candle formation that appears in a downtrend. Okay. The first candle is bearish, followed by a bullish candle that opens lower but then closes above the midpoint. As you can see, it closes above the midpoint of the previous candle that, that is bearish. Okay. So this suggests that buyers are stepping in and pushing back against the downtrend. Now, finally, let us talk about the 3 white soldiers. The 3 white soldiers pattern. All right. It is a strong bullish reversal pattern made up of 3 consecutive long bullish candles. Okay, as you can see, it's made up of 3 consecutive long bullish candles. Each candle closes higher than the previous one. All right, it's a series of higher highs. A series of higher highs. Okay, it closes higher with small or no wicks. All right, you might see small wicks or you might see no wicks at all, whichever one. So this shows consistent buying pressure and is often a strong signal of continued upward momentum. Now, while these patterns are some of the best bullish candlestick patterns to know, it is also important to remember that no candlestick should be used in isolation. Okay, confirmation is key. For example, you have to check the overall trend. Bullish patterns are strong when they align with an existing uptrend or appear at the end of a retracement. So if you find a bullish pattern, probably within a general uptrend, then that pattern could be stronger. Maybe after a pullback, you find a bullish pattern. That is very good. Or maybe at the end of a bearish trend, then during the start of a bullish reversal, you find a bullish candlestick pattern. That is very good as well. All right. So when you consider the general market trend, the overall market trend, when you put that into consideration, it could add more weight to your candlestick pattern. All right. Also, pay attention to trading volume. Higher volume during a bullish pattern often gives it more reliability. Another thing to consider is context. A hammer at a random spot in the middle of a trend may not mean much, but a hammer at the bottom of a clear downtrend has a lot more weight. Always combine candlestick analysis with broader technical tools like support and resistance levels, moving averages or trend lines. Okay, it's very important. So to recap, some of the best bullish candlestick patterns include the hammer, bullish engulfing, morning star, piercing pattern, and 3 white soldiers. Learn to spot them, confirm them with trend and momentum, and always consider the bigger picture of the market. So if you found this guide helpful, make sure to hit the like button, subscribe to the channel, and turn on notifications so you don't miss future tutorials. Thank you for watching. See you in the next video.